Welcome to the 2022 Economic Depression and Preparation Channel. I'm your host, Tony. Thank you for joining me on this Flag Day, June 14th, 2022. Things are continuing to heat up, and we're going to get into the news here in just 1 second. And I just want to encourage everyone that remind everyone that tomorrow night around 8 p.m. or 7:30 to 8 p.m. Eastern Time, I plan to have another live session, face-to-face live question and answer session. That's tomorrow night, Wednesday night, June 15th, 2022, around 8 p.m. Eastern Time, for those of you that can make it. So just the announcement there. So let's get right into it, guys. As you can see, job openings, ladies and gentlemen, job openings show sharp decline according to CNBC, but vastly outnumber available workers. Job openings fell by 455,000 in April. This helped close the gap between vacancies and available workers. Hirings and quits were little changed for the month. As you know, you go out throughout your communities, whether you're looking at fast food restaurants, retail, hospitality, transportation, you see these signs all around, now hiring, become a job. Used to be seasonal positions. Even Amazon Flex riders and all of our gig economy people, DoorDash, everybody says now hiring. It's posted on the cars, on the billboards, on everywhere we see these areas is posting, but they're not filling the vacancies. And the reason why is because, remember, guys, supply inputs have increased. The price of supply inputs have increased for restaurants, stores, manufacturing plants. Everything in America, that supply inputs have increased because we import about 70 to 80% of the stuff that you see in the stores, at these various stores, at Target, Kroger's, Walmart, Safeway, etc. Which is not an issue, but it is an issue when the price inputs are rising. They have to pass those inputs on to consumer. But when your operational costs are at a certain point, you can't hire an additional workers or give them any type of additional support because your inputs are high, and that's just basic company 101 economics. So. And that thing too is most of the job seekers, millennials and below, Generation Y and all of that, they're not gonna go drive and work for a place like Walmart. They may be paying $14-15 an hour, but inflation's at 18% right now, guys. Real inflation, according to shadowstats.com, is at 18%. So time you drive there is not worth the gas getting there and getting up and getting in your car to go. And now, of course, Federal Reserve Chair Jerome Powell is having a meeting tomorrow to raise the interest rates, and most of the market I've already anticipated a 75 basis point hike or a 50 basis point hike is what they're looking at. Many economists, including myself, I'm not an economist or some type of investment banker, but I think they should go a full point minimum percentage point, considering that inflation numbers have been doctored. They're saying that the U.S. inflation, as you know, is at 8.6% right now, but we all know it's double or even higher than double that right now, considering food and energy and shipping costs and everything else that's gone up. But he says that, quote, he will not hesitate to raising rates until inflation comes down. And I believe that. But the problem with that is it's not just the interest rate would have to raise to 17-18% like Paul Volcker did back in the 70s, and 20%. And I just don't think they have the guts to do that, because that would mean extreme pain. We would automatically be thrown into a depression. I don't know how would they spin it. The media would spin it. I don't know how would they spin it in the news or in television. But if we raise rates, their interest rates have to be risen higher than the level of inflation. That's basic math. So inflation right now, real inflation right now, is at 18%. So interest rates will have to be risen to 19 or 20% to get a hold of this thing and to bring the economy back down to where everything, the true value, from housing to all the asset bubbles that have been inflated the last year since 2008. Since they inflated the bubble by printing all these stimulus and who knows what else they've done with the money supply. So at this point, it's not going to matter how much you raise the interest rates. The only thing that matters is because this time around, the dollar is being devalued. The dollar is devalued. So we have a devaluing dollar here, and that's causing people to fall further behind on different bills and different things like that, and accumulate more debt as it costs more dollars to buy goods and services. Now, normally, people have told me that this would mean massive deflation. And that is correct. Yes, normally you would have a massive deflationary period, but you have to remember, like in 1929, we had a super hyperinflation. There was an inflationary depression in 1929. The exact same thing is going to happen now, but the only problem is that the inflation is going to squeeze out the liquidity, out the money liquidity out the system, and then it's going to be a massive deflation. But by that time, no one will have any real money, purchasing power, to buy up these goods that are on sale. So everybody says, oh, I'm going to wait till the housing market drops, or the used car market drops, or this market drops, the commodity market. By that time that happens, guys, everything will be destroyed and we'll be in a new economic system. That's what they call the Great Economic Reset, which brings in the cashless society, all of that good stuff. And that's what's going to happen. And so at that point, it's a moot point. The U.S. dollar becomes a moot point, even as the world reserve currency, because it won't be the world reserve currency at some point in the next 5 years coming up here pretty soon. So car repossessions are on the rise, according to Yahoo News, guys. This was a couple months ago, but I do believe that the new car repossessions are on the rise. And I also believe people are actually trading. I think also right now we have a situation where people are trading in their heavier gas guzzling vehicles, the V8 SUVs and the V8 big trucks, F250s, F350s, and getting smaller. They're sizing down to maybe a Nissan Altima, a Honda Accord, a Toyota Corolla, or a Honda Civic or something like that, or an EV like a Prius or something where they can get a tax break and save money too. So people are sizing down on their cars. They're getting ready because they know that gas prices are not ever going back to $1.95 like they were under President Trump a couple of years ago. So we're never going to see $1.90 gas anymore, guys. Those days are long behind us, and we're going to be stuck with high prices. Now, this was interesting too. This was on the BusinessInsider.com. The Great Recession misled millennials and made them think that home prices will eventually come down. Well, I thought so too, to be honest with you. I thought that the home prices would come down. But they keep saying it's supply and demand. The banks are artificially keeping those houses off the market. Those foreclosures. Remember, we had a bunch of foreclosures that we had in a couple years ago, like maybe 3 or 4 years ago. There's a bunch of foreclosures that were never listed on the MLS. That's the national database for the realtors. And so, guys, home prices are not going to come down because we have investors who had all this free money, like BlackRock and Vanguard and all these companies. So they're just going to buy up tracts of homes, whole communities, 50 suburbs or whatever at a time, and they're going to rent it back to you and I, the Americans. That's what they plan on doing. And that way they can charge whatever rent they want, $2 or $3 grand for rent a month. Hey, it's a win-win situation, And the cities and counties are not going to complain because they're going to get high property taxes out of this deal, supposedly. But here's the problem. The problem comes that they're going to have to lower their home prices this time because there's going to be such a glut of inventory that nobody wants to buy. And they're going to have to rent the rest and lose money on it. And the cities and counties and townships and municipalities are like, look, we got to have some warm bodies in these places, whether that be Section 8 people or, regular people or whatever, or immigrants or migrants. They're going to need to fill these things. And so that's why I believe that the prices are going to come down. But it's not going to be until next year, summertime, unfortunately, because it has to get to the point, like I said, where interest rates get back up to above 10%. Until and the mortgage rates get above 10%, which they're going to do. Mortgage rates are going to be probably before this summer is out. Mortgage rates are going to be at 8.5%. So get ready for that. And you're going to see a lot more things soaring in this depression as well. So the housing shortage is going to turn into a housing gluttony as people sell their homes, get small. Those who have invested a lot in their homes are going to sell it for whatever they can, get out of it, go small, whether that's going to a tiny home, a family house, some kind of alternative, arrangement off the grid home, because they know that they don't want to be in a situation where crime is going to go up in their community, and they're going to be in a situation where things could get very ugly should the food supply stop in a lot of these cities. And should the gas supply stop when we start going back to like a gas rationing like they did in the 70s after the, I think it was the Iran conflict or something like that. So things like that could happen. But with the prices of house right now at $425, we all know that's unsustainable. So eventually this is going to drop. And it's just a matter of time, guys, before things really, really get concerning. Mortgage rates right now are already above 6.28%. That's today. It jumped up whole full 1.5% from last week. It was at 5.1 to 5.1, something like that, 5.2%. Now it's at 6.28% and growing. And we've never seen it grow that fast. And that's because the value of the dollar is decoupling. As the value of the dollar is decreasing. And, things are going to get really ugly. And I believe, and this is a future thing, I'm going to have to get into this a little bit later, but I believe that things are going to get so bad in the U.S. that they're going to be calling in, instead of we going overseas to call in the UN and all that, they're going to be calling the UN and things of that here eventually. But we're going to be the last domino, one of the last dominoes to fall, guys, after Europe declines and after all the other G20 or G8 nations or whatever it is. We're going to be the last of the kind. Then they have to call the UN and everybody in the store. Civil disobedience is going to be at an all-time high. That's coming back when the kids go around to school. I say around September, October. That's when things are going to get really, really interesting, guys. And that's not counting any black swan events. So we just got to be prepared, be safe, continue to prepare as best we can. That's all we can do. and just make sure that we're being vigilant with our supplies, vigilant with our budget that we all trying to stick to, and that's it. Because the handwriting is on the wall, and Babylon is falling, as they say, are going to fall. So, all great empires only last for a season, guys. You know that. Rome, Great Britain, all these great empires, the dollar, it has its day, but now it's time to, they're going to turn the page and hand over the realms to another nation. And people are not going to be happy about that, but that's the general truth. That's what's going on here. Unfortunately. And so globalism, we tried it for 25, 30 years, 35 years, and it was great while it lasted, cheap labor, exploitation of countries, but now every country is moving for every country for themselves, protectionism, individualism, and that's what we're seeing all across the board. No matter what world news source you listen to, countries are moving back to protecting their own resources and protecting their people, and getting back to building their own economies and not participating in a kind of a globalism thing. So be prepared, guys. Stay safe. Remember, tomorrow, I'll see you tomorrow for the live. Thank you for listening. Have a great night. Bye-bye.